folks, Dan Frio here, the rate update. Today is, I'm going to reference this as Federal Reserve Day. So the Federal Reserve came out today and gave us some news. The last two months that they went over this data, mortgage rates spiked. So what happened today? Don't go away. We'll be right back. Okay, so the Federal Reserve came out today, and you're going to see here in a shortly how rates kind of spiked and then they came right back. But before we do that, let's see what CNBC has to say about what the markets are, how the markets are reacting to all this news. So stay tuned.
No change in interest rates, Tyler. The Federal Reserve keeping interest rates in the range of 0 to 1/4%. But on the issue of tapering, the Fed didn't say the words, but saying that the Fed said the economy has made progress towards the goals of substantial further progress, which is the way it assesses whether or not to eventually begin to taper. So it's made progress towards that goals and saying it will continue to assess that progress in coming meetings. So that's the nod towards the idea that they're thinking about or still considering this idea of tapering, and they say they've made some progress. On the economy, they say the economic and employment activity have continued to strengthen. Sectors most affected by the pandemic have shown improvement, but the Fed saying those sectors are not fully recovered. Continuing the language on inflation, saying it largely reflects transitory factors. There's that word again, so give yourself a point if you were waiting on it. The path of the economy of the Federal Reserve continues to depend on the virus. Risks remain to the outlook. No change in QE policy, just to be clear. They're still going to say they're purchasing $120 billion a month, 80 of treasuries, 40 of mortgages. The decision was unanimous. The Fed saying, of course, rates will remain in the current range, that is 0 to 1/4%, until its employment and inflation goals are reached. I do want to make one note of what David Kelly had just said, this idea of would there be a nod to the Delta variant. And I can tell you that they didn't say it explicitly, but they did drop a line saying that the vaccine has reduced the spread of COVID-19. They're still up on the vaccine and said positive things about vaccinations, but they dropped that line saying that the vaccine has reduced the spread of COVID-19. Kelly?
So let's kind of break down just a couple areas that they spoke about. They did hint of tapering. Okay, so here's what's happening in that part of the markets. So it's basically, just think of supply demand. You have a widget and you have so many widgets to sell. As there's more people willing to buy that widget, the price goes up to hit an equilibrium that you can make the most on your money at that supply. So that's basically what how mortgage rates work. Mortgage rates are determined by the mortgage-backed security bond. Okay, so what the Federal Reserve is doing, they're buying over $40 billion worth of those bonds every month. So there's a lot of buying pressure pushing up prices. Okay, as we know, how mortgage rates affect to when mortgage-backed security prices go up, mortgage rates come down. Okay, so the Federal Reserve's been pumping in $40 billion a month, buying up the mortgage-backed securities market to keep a stabilization on mortgage rates. They did hint today that they, of possible tapering, but not anytime soon. So the market first reacted, the MBS market dropped, and I put out a lock alert, and then I paused it. Because all of a sudden, Federal Chairman Powell, they started liking what he was saying, and then the market turned. So let's dig into the fine details of what's going on right now. So the first thing we're going to look at is the headlines on CNBC. It's right here. And sorry, guys, I use CNBC. That's my go-to because their data is very, very current. It's unbiased because I'm just basically telling you what they're reporting. But it says, Fed holds rates near zero, says economy has gotten better even with pandemic worries, but we're not out of the woods yet. Okay, so what effect did that have on the mortgage-backed securities market? Well, it actually didn't. It was fine. We ended up 8 basis points today. Okay, so let me give you a little bit of history behind this. If we go back in time, in May, when the Federal Reserve came out, there was a rumor of inflation. It's in the markets right now, and there's rumors of tapering. So what happened is we were trading right here, okay, and the MBS market crashed. Okay, so basically what we're looking at here, let me put this in context. Right here is what's happening to the price of mortgage-backed securities, the bond that trades on Wall Street. There's the yield, okay? So I expected us to be at a 1.8, now at 1.88, okay? So I'm fine with that. That's fine. That's actually really good, better than what I expected. Okay, so what happens is, again, and let me show you on this, when the Federal Reserve keeps meeting, it seems like all that fear comes in the market and the markets plummet. So what happened back in May, Federal Chairman Powell came in and put a nice spin on the market, and we went back up to kind of almost where we were, okay? That's right here. So this chart is what's happened over the last quarter. All right. So then we stabilized and we actually exceeded the last marker, but there's a line right here, and I'll go over that in a second. Then in June, same thing happened. It was darn near a clone. Fears of tapering came in, and then inflation fears came in. The market plummeted again, spiking up mortgage rates. Since that time, look at this run. Okay. Again, when the mortgage-backed securities market is going up, rates are coming down. All right. So the assumption coming in right now would be, is this week, are we going to see another drop? Because if you notice here, let's take the middle of these two. We had maybe the potential to drop all the way down here. That is a huge bump in rates. That might be 0.5% in rates. Okay. What happened today is, let me go over the intraday chart. We came along and then the market dropped. We were actually down at one point right in here, down about 11 or 16 basis points. And then we rallied. Okay. That's what we were looking for. So now that puts this in context for me. Let me show you where I'm thinking we're going from here. So I'm going to refresh my screen and show you some analytics behind all of this. And I'm going to try to do it as fast as I can, because unfortunately or fortunately, I get more views the shorter the time duration. I know you guys don't want me to bore you with all details, but I'm trying to appease all parties. All right. So what we have through here is what we call Fibonacci levels. Okay. There are these lines that go straight across. What these are resistance lines of charting both up and down. So basically, if you look at this chart, it's saying over this whole time duration, we have a Fibonacci level right here for a top, and we have a Fibonacci level down here for a bottom. Okay, but we're going to squeeze this in the short term. Here's where we've been trading in the short term. Okay, I see that we could possibly reach the 102 figure, which would bring rates down maybe another 0.1, maybe another 0.2%. Okay, that's great news. The bad news is these other lines through here give us moving averages, 25, 50-day, and 30-day moving averages, these squiggly lines through here. That would potentially give us a floor. Let's say it's going to be a floor. And let's say for a short-term floor, the floor will be here. So right now, my assumption is we're going to be trading between this range here. And most likely, we're going to be in a more of a tighter range in this area here. So my prediction is I see rates being basically stable from here. They could go up about or down 0.2 in rates, and they could possibly go up maybe 0.2 in rates. That's what I see for the next week or two. But economic data counts. So what do we have coming in the next few days? Well, we have initial jobless claims, continued jobless claims. We're not going to look at the purchasing price indexes and some of these other things, or pending home sales, because I'm going to say that's irrelevant for us. We are going to pay attention to the jobless claims. We are going to pay attention somewhat to the personal income. But right now, basically what the Fed is saying is we're kind of throwing the inflation fears out. We think it's going to come back in line. Our major concern is the job market, and that's their number one concern. So what's going on with rates today? You can see that we have basically almost nothing happened. These are rates from Black Knight. They get posted every day, and I share those with you. They go over 30-year conforming jumbo FHA and VAs. This is what I share with you, not 15, not 20-year terms or so forth, because we'd be on here all night. So this just gives you an idea what rates are doing. Let's put it that way. These are not my rates. So basically over the last day, that means here, 1 day delta means what they did over a day's period, what they did over a 7-day period, and what they did over a 4-week period. Delta means change. So basically a 1 day change, we virtually had no change at all. The basis points, if we were to put this in numerical terms, 4 basis points means or equates out to 0.04. So that means if they're up 4 basis points, we were at 3.02 yesterday. Okay, so that's what's going on there. 7-day delta, there's really not much of a change there. And the 4-week delta, we're about an eighth lower than we were a month ago. So that's my mortgage update for today. I hope you like what you see. If you do, all I ask you to do is a couple things. Give me a click, thumbs up, just so I know I'm doing a good job. If you would, make sure you subscribe down below. Hit the bell. Every time I post a video, you get an alert. What I'm asking you to do is, if you're in the mortgage process right now and you're pre-approved, you're building a house, or you're looking to refinance, if you're in the process now, send me what's called your loan estimate. Every bank or every lender out there, once we pull your credit, we have 3 to 5 days to get you out a loan estimate. It breaks down everything. And what I mean by everything, breaks down everything. It breaks down your rate, your fees, your term, the whole ball of wax. Send it to me. What I do on a daily basis is I go review them all, mark them up in red pen, and send it back to you with a short little video of me going over what your quote is from the other place and what I can do for you. Most of the time, I'm beating them on rate, fees, or C, all of the above. There are times where I don't beat them, and I'm like, God bless you, go with it. If you're comfortable dealing with them, go ahead. Sometimes I do get beat. That's fine. That's the nature of the beast. But if you're in any of those processes, or you need pre-approved, let me know. The best way to find out more about me and my team is visit our brand new website. It's therateupdate.com. All you have to do is go there. You can give us, there's multiple ways to get a hold of us or apply for a loan. You can give us a call at 844-775-LOAN. You can click right near and hit apply now, and it'll get it'll take about 10 minutes to complete the application. Give us a couple hours. Once you do that, we'll review all of your data. We'll give you a call or an email or a Zoom, and we'll go over what we can offer you or what our thoughts are on how to get your loan done. If it's late at night or early in the morning, and you're like, I can't talk right now, but I'd like to talk to somebody eventually, all I need you to do is schedule a meeting. You click schedule a meeting. It'll find days and times available that we have. You click that, then you pick the time that works for you. And then what it'll do is you then let us know, how do you want to do that? Do you want to do it by Zoom, or do you want us to call you, or do you want to call us? You just put all that information there. And at that day, on that time, you expect to have a meeting with us to find out all the answers to your questions and more. So that is it for today, guys. I want to thank you so much for watching. God bless. I'll see you tomorrow. Bye-bye.